Hello and welcome to ET Now. You're watching IPO Central and my guest today is from Saatvik Green Energy. The IPO is opening on 19th of September, closes on 23rd. Price between 442 and 465. It's a total issue size of 900 crores, which includes a fresh issue of 700 and OFS of 200 crores. And the company is valued at little over 5,900 crores at the upper end of the price band. And joining me today is Manik Garg, who is the managing director of the company, and Prashant Mathur, who is the CEO of the company. Gentlemen, thank you very much for joining us on ET Now. To begin with, Manik, can you take us through your business model? You are one of the largest, manufacturers of solar modules. So, can you take us what about the manufacturing? How big is your manufacturing setup and the business model that you have?
Right. So thank you for inviting us to your show. So Saatvik Green Energy was established in 2015, and in the last 10 years we have grown significantly, organically and consistently. We started with a humble 125 megawatt per annum capacity, which at the end of FY25 stood at 3.8 gigawatt per annum, which primarily consists of the latest and top-con technology, because we at Saatvik focus on the latest technology adoption and bringing the latest technology to the country. In terms of the key strengths, we have a very large customer base and a very well diversified customer base across different revenue and sales channels. In channel as well as utility scale and CNI segments. We are among the leading module manufacturer in the country, and we have a pan-India presence when it comes to our distribution channel. So we are very well positioned to capture the industry tailwinds, which are there under the vision of our Honorable Prime Minister.
Prashant, can you take us through you're raising 700 crores? Where is it going to be used for?
So some part of the 700 crore will be used to retire our existing debt, both in Saatvik Green as well as in the subsidiary Saatvik Solar. We are also setting up a 4 gigawatt of module manufacturing in Odisha. So the proceeds will be used for expansion of that manufacturing capacity in Odisha as well. Apart from that, in Odisha, we are also expanding into backward integration into cell manufacturing. So entire 4.8 and of cell manufacturing and 4 gigawatt of module manufacturing will be undertaken in Odisha. Post that, our manufacturing capacity for module will be 8.8 gigawatt.
Manik, you spoke about Capex for Saatvik Solar, 4 gigawatt. Currently, what is the kind of cell manufacturing capability that you have, or do you import entire cells requirement from overseas?
Right. So as of now, we are a concentrated module manufacturer. And we are backward integrating, as Mr. Mathur mentioned, by putting up a 4.8 gigawatt of cell manufacturing, which we are doing in Odisha and which will come online in the next financial year. So our focus is to backward integrate. Currently, the cells that we procure are mix of imports as well as domestic procurement, but to remove the dependence on imports, we are indigenizing the manufacturing capability in house, and yeah.
Prashant, by when do you expect this entire facility to come on stream? And when you do so, the cell manufacturing, where are you sourcing the wafers and others from, or wafers, are you going to source that from India itself, or is it going to be again imported from outside?
Yeah, so module manufacturing, entire 4 gigawatt will be coming on stream at the end of this financial year. And cell manufacturing will also be done in 2 phases. So the first phase will be operational by FY27. Apart from that, the second phase of cell manufacturing will come in the future FY28 financial year. Wafers, currently India does not have wafer manufacturing, but the manufacturing landscape in India is moving towards backward integration and creating the entire ecosystem. So as we are backward integrating into cell manufacturing, there is also plans for us to further backward integration into ingot and wafer manufacturing. For that also, after this Odisha project, we have plans to set up ingot, wafer and cell manufacturing in Mohasa, Babai. It's an industrial area in Madhya Pradesh, in Narmadapuram. And so wafers till then will be imported, but the ecosystem is fast getting developed in India, and we will soon see that entire ingot to module manufacturing will start happening in India.
Mm-hmm. Currently, if I'm not wrong, you're raising some 477 crores for Capex for Saatvik Solar, and that's for module. How are you planning to fund the manufacturing facility for cell?
So we have internal accruals from last year, and we are also having internal accruals for this year. Plus we have access to debt, which we will be using for funding for our cell manufacturing. The proceeds from the IPO will be used for module manufacturing 4 gigawatt. Entire equity will be funded from there.
Okay, so Malik, so is it fair to say that as you expand backwards and you eventually the plan is to go towards ingots and wafers over the next 3 to 4 years, you would be required to raise further funds, or will you be able to generate enough cash flows from operation to manage that kind of organic growth for your company?
Right. So as I mentioned earlier that, with the last 10 years we've grown organically and we've established ourselves as one of the largest, bootstrapped companies in this industry. So from that standpoint, as well as the fact that we are a CRISIL A- rated on the debt side with a very low leverage ratio. So we have access to both debt as well as equity. We will have access to both debt and equity in the future to fund our expansion plans. So as in when the funds are required, we will take a strategic call with the consultation of the board and move forward with the strategies.
Prashant, if you can also give us a sense of who are your big customers, because your top customer accounts for roughly 17% and top 5 account for nearly 44%. So who are your main customers here?
We sell into all segments, be it the large utility segment, be it the C&I, which is the commercial industrial segment, and also retail, wherein you have both Kusum as well as the PM Suryagraha customers, which is a residential rooftop customer. So we have customer base is spread into all these segments. Apart from that, we also are doing solar EPC and also solar pump business. So we have very well diversified customer base, and we are selling into all these segments.
What is the kind of order book that you have for your rooftop?
So our current order book for solar panels overall is over 4 gigawatt, which translates to over 5,000 crores of revenue. Since it's a rolling order book, and orders get executed and new order book get built, because it's 9 to 12 months order book. So we have a very good and strong order book and very strong future order book build up as well.
And what is the current leverage that is there on the book in terms of borrowings?
So our current leverage is less than 2:1. Debt equity ratio is around 1.3 to be exact, and which will further reduce after this equity raise. Like I mentioned earlier, we have consistently focused on like the lowest leverage, and even if in terms of working capital, we optimize our working capitals in a way that we do not ever over leverage in the business.
Mm-hmm. One point on the margins, 14.8% for your EBITDA margins. Do you see that you have enough levers to take these margins higher? Because if I compare it with your peers, it's slightly lower on the lower end from a margins point of view.
Yes, we have as we are also backward integrating into cell manufacturing. We have very high confidence that we'll keep on improving our margins in the future as the cell capacity and gets online. Our margins should expand in the future.
Mm-hmm. Gentlemen, it was a pleasure talking to you today. Your IPO, Saatvik Green Energy, is opening on September 19th and closes on 23rd. Price between 442 and 465 rupees per share. Is a fresh issue of 700 crores and OFS of 200, so a 900 crore IPO, and that values the company at little over 5,900 crores at the upper end of the price band. Thank you for joining us today on ET Now and coming on IPO Central. Hello and welcome to ET Now. You're watching IPO Central, and the company in focus this time is iValue Info Solutions. It's a company which is into enterprise technology solutions, providing comprehensive comprehensive and purpose-built solutions for securing and managing digital application and data. And it works with OEMs and other providers, system integrators, to provide this kind of platforms or softwares or technology to other clients. This company's IPO is opening on September 18th, closes on 22nd. It is a price band of 284 to 299 per share. It's an offer for sale of 560.3 crores, and that values the company at little over 1,600 crores at the upper end of the price band. And joining me today is Mr. Sunil Pillai, who is the promoter and CMD of the company, and Venkata Swarup, who is the CFO of the company. Sunil, let me begin with you first. Give us a sense of your company's operation. You are into the IT services and solutions providing market, but give us a business model that you have.
Yes, Sajid. Good morning to you, Sajid, and good morning to the viewers. Thank you for having us. To brief you about iValue, just before that, I would like to take a step behind and tell you about the team. We were, all of us, all the founders and co-founders of our organization, we come from an organization which was the platform of or a gateway of India for cybersecurity solutions. So to say that our underlining or the DNA of our organization or DNA of our people has been around cybersecurity solutions. So we come from that foray. To start with, iValue incorporated in the year 2008, and we started with cybersecurity as a market segment, and we forayed into that. And while we're doing cybersecurity business, we realized that there are other new avenues being opened up in the market, that is in the ILM space, the DCI and the ALM space, and the cloud space, of course. So we forayed and we have diversified our growth prospects into multiple market segments, which include cybersecurity, ILM, DCI, ALM, and the cloud piece. And we have we have been in India we have been running this organization for last about 18 years now, and we have 9 offices across India. We are one of the few organizations that has forayed beyond Indian boundaries, and we have opened up our operations in SAARC countries as well as in Southeast Asia market. While the base is small, but the growth is very fast over there, and we have greater revenues and growth prospects in those regions. Typically, right now, iValue as an organization, we are sub 500 people catering to this market. We have a great potential and a great growth prospects in the next 10-15 years. There's a paradigm shift that is happening in the industry, and we are ready to cater to those needs. Thank you.
Mm-hmm. So, give me a sense of the business model and the revenue model that you have.
So the business model, we form a very critical player in the supply chain that we do. We have the original equipment manufacturers, which we call them technology vendors, and they are based across the globe. We are known for bringing new and niche technologies and introducing them or anchoring them in this market. We understand the customer's insights, we understand the customer's need, the business requirement, and we curate a set of solutions from multiple technology vendors, multi-stack it, and we take a very highly consultative approach with the customers, that is the enterprise customer, the original users, and we do business only through system integrators. While our engagement would be in a very consultative approach with the customer, but all our billings and all our transactions happens through a system integrator, and they are our primary customers.
Mm-hmm. Give me a sense of how big is this business growing, and what is the rate at which it is growing? Because while you say that you get the services from the OEMs, but you work with the system integrators. So what is the kind of opportunity that you have in this segment?
So the greater advantage that we see with ourselves is that since we have served about close to 6,000 plus customers in the last 18 years, we have deeper insights about the customers' digital transformation or digital journey that each one of them are taking. End of the day, if you notice that every customer is serving some customers in the market. So we understand that business needs, we understand the technology that will play a pivotal role in their journey and in establishing or making an outreach for those customers. So what we do typically is that we bring all these technologies. We have a center of excellence center in Bangalore. We curate all those solutions. We show the impact of those solutions for a customer, and the customer is able to establish a very meaningful decision before buying the product. So they get to validate the impact of the solution that they are going to adapt to. So that is one of the best unique positioning of ours, and this gives a jump start to a lot of OEMs, the technology vendors. There are a lot of niche technology vendors who are coming into India, and we become the gateway of India for them. They can do a dipstick, they can do the litmus test through us, wherein we curate their solutions along with other existing OEMs, and we position and showcase those solutions to the customers. This way, what happens for a OEM is that they get an instant gratification of certain called out customers where we can go and position our solutions. And since we have a base of 6,000 customers, we have been able to categorize those 6,000 customers within the market verticals So we can pick and choose a vertical, we can pick and choose a customer in that vertical and go and showcase these solutions. So for an OEM, we become a what you call platform for a jumpstart their business. Besides this, what happens is that even for system integrators, we actually complement to their existing business. We go to the end customer and we do some level of heavy lifting in terms of showcasing the solutions, which actually saves a lot of time from a system integrator's perspective, because already the customer has seen the solution that we have shown. They are ready for those solutions. They just have to choose the system integrator to implement the solution to them.
Swaroop, come in here and give me a sense of your margins, because 12.36% is the margin, while it has fallen from 12.7 in the previous year. Is the margin for you in this category around 12 to 13%, or there is enough headroom or levers available for you to increase the margin?
Good morning. iValue as a company has been one of the pioneers in this segment across the 4 verticals, which is cybersecurity, ILM, data center cloud, and the application lifecycle management. This is a very, technology-rich segment. Understanding of the technology is one of the biggest strengths which we bring onto the table. Coming on to the margins per se, the margins, we look at it on the gross sales of the company. The gross sales around 2,500 crores is what we have done in FY25. You can see that in our RHP and other things. Our margins have been consistent and are growing. And we believe that there is some headroom for the operating leverages to kick in, thereby positively impacting our bottom lines.
Give me a sense of your accounting standard here, because I was looking at your RHP. While you said that gross sales is around 2,500, you've taken on a net basis for your software and software development and software allied support, and IT enabled services are taken on a net basis, while hardware is a pass-through in that sense. Since you don't make a direct manufacturing of hardware or production of the hardware, why isn't that as well that taken as a net as well?
Yes. Again, as Sunil has explained, we are a technology aggregator who work with 100 plus OEMs, bring their technologies to India, and then sell it to the end customers through the system integrators. For us, as a business model, we understand what the client requires and offer them. A hardware or a software is a differentiation which we don't make as a part of the business. But we are bound by the accounting standards, we are bound by the laws of the land, wherein we have to make this differentiation between hardware and software. The Indian accounting standard, as advised by PwC to us, says that the hardware which is there, because you have a touch and feel of it, you have a control of it, can be treated as a gross basis. Whereas the software, which is coming with a specific end user name mentioned in it to a specific end user, is taken on a net basis. Hence, we see an approach which is there. And this approach, I'm sure, is globally followed by other players also, and in India also. This is more and more companies are adapting this accounting approach.
While on a net basis, what you're saying is that you take only the commissions as a net revenue for you. What is the kind of net commissions that you get, or the margins that you get on hardware? Sunil, if you can elaborate on that.
So typically, Sajid, now we don't differentiate between hardware and software. It used to be there once upon a time. It is no more the thin line that was that has been erased. So we talk about solutions. So the solution can come in the form of a software, typically which will go on a hardware. But then there are certain OEMs which come with an hardware-based solution. That means they burn the software onto the hardware and they position the solution. That is the reason being hardware is sensitive to the software or the application that is developed by the OEM. Hence they OEM the hardware from other manufacturers, and they purpose build the hardware with their solutions and then render it to the customer. So between hardware and software, we don't differentiate as such, but margins are flat between these two because we go based on project based, and we are north of 10% in terms of our average GM, and we think that we can sustain and continue to maintain that.
So, from a street perspective, if the street was to look at your top line, they should be looking at your software and allied support and IT-enabled services for the margins and growth, because hardware would be a pass-through in that sense.
Not exactly, Sajid, because hardware and software, as I told you, it is part of the solution stack that we offer to our system integrator and to the customer. So there is a flat, there will be a margins which will be flat across these two as a consolidated and an average GM. So that's what we work on, and that's how we have been positioning ourselves, and that's what we have been recording in our financials also.
Is the true reflection of our business.
Yes.
That is what we believe. And hence we would request the street also to look at on a gross sales basis.